Hey, good morning, everyone. This is Rick with Hit and Run Candlesticks, and today is Friday. Yeah, Friday, September 25th, 2020. I want to thank you all for watching our video blog today. Hey, I also want to thank the folks that posted some questions out there on YouTube, and I would like to answer those as well today here on the video. Plus, we're going to look at a couple of possible trade ideas. But first, let's take a look at the market and try to figure out what's going on here. So I've got the SPY up, and it's clearly in a downtrend. You can clearly see that. We've got a high. We've come down and made a low, a lower low, a failed high. Actually made a lower low here, another failed high, yet another lower low, and a failed high, and yet another lower low. Anytime you get that type of chart pattern, that's just not bullish. Yesterday, I found that there were a few people trying to pick some bottoms in charts, which, you know, if it works for you, great. But overall, I just don't know if that actually works out in the long term. One of the best tools that I've ever run across for helping me with, well, should I be long or should I be short? And it's trading with the T-line. And the T-line, years ago, when I came up with the T-line idea, which it's nothing more than the 8 exponential moving average. And after basically failing in trading, I had to come up with a way that could keep me on the right track. And that's what the T-line does for you. It really does help you stay on the right track. Now, the T-line it's probably more for the short-term trader. It would be nothing for the long-term trader, really. But for the short-term swing trader, you know, what is swing trading? Overnight, that starts your swing trade. And it could be 3 weeks, could be 6 weeks, could be 10 days. There's no real end to what a swing trade could be. But it starts with overnight. And when I see price underneath the T-line, by the way, that's the black solid line here, or dark gray solid line. That's the T-line. When I see price underneath, that is a guideline for me to say, well, I really don't want to be long in this chart. And a trend has actually started to the downside. And the trend could be very, very small. An example is, let's go back up here right there. So this candle closed below the T-line. Well, that's trending below the T-line. Now, if the very next day we came back above the T-line, well, that would be trending above the T-line. So you don't have to be above it a number of days or below it a number of days. We just want to watch that as a guideline. And out of all my years of trading, this has been one of the most helpful indicators on a chart that I've ever run across. Just simply following what the T-line does for you. You know, if we go back over here on the SPY, you can see right here we're underneath the T-line. Well, I know there's this urge to get bullish. It really is. There's this urge to get bullish. But the truth of it is if you would put your trades, whatever trades you make, are they below the T-line? Are they above the T-line when you enter them? Write that down on a piece of paper and keep track of them. So, and I think what you'll find is that your success rate will just be remarkably more if you waited to above the T-line. Now, I know we've got this urge to buy low and buy cheap. I get that. That's just a trader's thing. But if you look at this chart here, compared to this candle right here, well, buying down here would be low and cheap. Let's just use this here, easier to do. So if you were to look at buying here versus buying when we start coming back up, well, this is low and cheap compared to this. So we are still buying low and cheap. We're still buying at a discount. Now, no, we're not buying at a discount down here because it is actually still in a downtrend. And I've just found that you really don't want to trade long when the chart is trending down. So I just wanted to mention a little bit about the T-line here today and how it has helped me, and just the ease and the simplicity of below it is not a long, above it is not a short. That would be a good way to explain it. Okay, let's move on here a little bit. So if we look at price here, you can see price is below the T-line. The T-line actually is below the trend indicator. This thing is pointing south. Now, is this some reversal pattern? I've had people email me last night and this morning. You know, we've hit a bottom here and we're going to rally up. Well, that would be bottom picking, and that would go against every rule that we might have over here at Hit and Run Candlesticks and the Road to Wealth account. We're trading in a downtrend. What we're going to wait for is we're going to wait for those bulls to step up. Prove to us that you can do something. So it might look something like this, a bullish candle, and it can wobble around a little bit and then break out. And that's where we'll start looking at trading. Now, I'm not saying that's what's happening today, believe me. I'm still thinking that we head south, and that's why we're going to look at some inverse ETFs today for some trade ideas, and we'll talk about those in a moment. So I still think we're heading south. That's what the trend is doing. Until the trend changes, we'll stay with that. Excuse me here, let me FNGU there, had to get the fingers working. FNGU for the most part has been moving sideways here, and that's great. The FNGU, the big tech ETF here, it could be holding up, but we're going to need to see that really move up here back above the T-line and show some stability. You can see how we've been down below the T-line, and we're even down below the trend indicator with price and the T-line. So trying to go long here just does not make sense unless you're looking for a lottery ticket, unless you're just guessing. But if you're looking at the chart, there's just nothing here that would suggest that we want to be long, say at the close yesterday. So, excuse me, drink coffee there. So we're going to wait till that moves up and gives us that key, that clue to be long here. Now, of course, if we start breaking down through these lows, that's going to give us the clue that we're headed south even further to the downside. VXX, you can see is above the T-line right now, and our trend indicator has turned green, but our T-line's not above the trend indicator. For all the market moving down, the truth of it is there is just no fear in VXX. There's a little movement, but nothing that would suggest a ton of fear. All right, let me answer a few questions that were asked on YouTube, and I would encourage people to ask questions on YouTube. And if you have a few questions about a few charts, that's okay. We just don't want that to get out of hand. But I don't mind answering specific chart questions. Like I said, we just don't want that to get out of hand. But if you have questions about the charts, about how I might look at this or look at that, how I use the T-line or something like that, please ask, and I'll see what I can do to help you on the next video. So here's a question from B. Elliott. B. Elliott says, hey Rick, quick question. In progressive, let's get over here. There we go. Progressive PGR. His question, in progressive, is progressive still a play, or would you avoid it through because it dropped through the trend line? Looks like it found support on the 50-day moving average and found some buyers yesterday. Well, let's take a look at that. Let's come over here. There we go. So this chart here, we have the T-line up, and we have the trend indicator up, and we have the 50-day period moving average up. So, Mr. Elliott there, well, you know, I'm not sure that it found what we're looking for as far as support goes, and I'm not sure that it really found what we're looking for as buyers goes. As any chart moves down, it's going to find places where the dip buyers are going to step in. You know, each time, you know, if we just come back over here, somebody could argue, well, right here, we found support, right? Now, I certainly didn't find any buyers to speak of, but it found support, but yet we went lower. So what we want to make sure of is that there's really buyers there. And we don't want to be buying in here because this would be picking a bottom. We don't want to be buying just because it hit some so-called support, because without price action, really you just have a spot on the chart. We don't really want to be buying on the 50-day moving just because it's on the 50-day moving average, because really we don't have proof that the buyers are there. And what we're looking for is, take yesterday's candle, this doji here, right? Well, if we started trading over yesterday's doji, that would be an indication that there maybe are some buyers coming in. That's what it might be. Or if over the next several days, we saw, and candle color doesn't necessarily matter, so I'll just do it this way. But over the next several days, if we could hold inside this area, that would suggest that the buyers might be holding it up. But still, we need to see that breakout to prove that the buyers are still there. Otherwise, there's too much of a chance moving down. So we want to be a little careful there. So does it mean that the buyer's stepping in? Well, you know, right now it's hard to say. It just means there's a little indecision. Indecision doesn't mean that we're guaranteed to go up right now. So we'll keep our eye on it. Please, you keep your eye on it and let us know what you do with it, okay? Mike B is asking, much thanks for your updates and explanations, Rick. Thank you, Mike. Was also wondering if you look at a certain delta on the options you buy, and if they are generally 30 days or less for expiration. So here's what I do. Let me bring this down for you. Here you go. And let's just say PGR here, okay? Let's say we're going to look at PGR. So what I generally look for in this order, and this is about all I look for, is I will go out 50 days plus. So I look 50 days plus, and I would have no problem going out 147 days over here. So here's November, and that's 50 days plus. So let's click on that right there. And then the second thing I'm going to look for is open interest. Do we have enough open interest? Now, I can't speak for you. Generally, you want, say, 20 times the amount you're trading is what you might want to look for a minimum open interest. So November, it's this one here is not too bad right here. I'm going to peek at the January, see what the January offers. Really not a whole lot of difference. Not a whole lot of difference. So let's go back to November here. So what I'm going to look at this is at this November 85 strike. It's got 453 contracts out for open interest, and the delta is 72. So you asked what delta I use, and I try to buy around a 70 delta. 65 would be okay if if that was one of my choices and I really wanted the chart, all the way up to, 79 maybe, even up to 80 in some cases. So somewhere around that 70, and you've got to have good open interest and at least 50 days out. So that's what I do for my for my delta, for your question on delta and how far I look out. Let's see. Somebody by the name of Manoj, apologize if I have that incorrect. When you get into, say, a call, expecting it to rise in price, what call strike would you choose to ride to the upside, in the money, out of the money, or the target? Well, I just covered that. Would be the same answer. So let's pick another chart here. Let's put SDS. Okay, I happen to be long SDS, so let's take a look at that. And let me bring this option chain back down for you. So let's look at SDS. So again, I'm going to go 50 days plus. So you can see here, here's November, and here's December, here's January. Let's start with November. And I'm going to look for that delta around 70. Excuse me. Delta around 70. 67, 79 would work. But I'm not real excited with the open interest. So let's move over here to December. There we go. See, the open interest is much better now. Now let's come over here to the delta. Here's a 66, a 75, and 84. Any one of those three would probably work for me in here. Any one of those three. So again, that's what I'm going to do. You type in your ticker symbol. You go at least 50 days out. Look for good open interest, and then a delta around 60, around 70. And that would be in the money, by the way, in the money, around 70. And in this particular case, 66 would be okay, 75 would be okay, 84 would be okay in the delta. So that is answering that question. Thank you very much for those questions, by the way. I appreciate it. All right, let's look at some charts now, okay? All righty. So this is Friday. Overall, on Fridays, I think it's better that we start closing up shop, getting rid of our deadwood, maybe take some profits off the table. Who wants to go into a weekend with a lot of risk, right? It's bad enough you might hold it overnight, but now you've got to hold it over a couple of nights. Man, it's just too much risk. So all in all, I think it's best to lighten up positions. But if we're looking at buying positions, here's what I'm seeing right now. First, I want to remind that the market appears to be moving down. Now, anything can happen today, for sure. But right now, the market appears to be heading down. If you look at the diamonds, it looks like we're headed down. IWM, it looks like we're headed down. Now, we have a doji here, right? But if we don't get follow through, you don't have anything. And if we get follow through up here, you're going to have to cut through a lot of resistance before it gets anywhere. And we're still clearly in a downtrend. So right now, I'm looking at some inverse ETFs. And that's what we're going to look at today, just a couple. I've got a list of them here. We're not going to go through every single one of them. We're just going to look at a few. And let's start with SDS because I am currently long SDS. Now, I did take some off the table yesterday. Took a nice little base hit, needed a little cash, so I took a little. You can see that we're trending here. You can see that Price is above the T line, right? We talked about the T line a little bit earlier this morning, and I want to trade stocks where we are above the T line. So we've got price above the T line. You can see price is also, I'm sorry, the T line is also above the trinicator. That's the green dots and red dots. In this case, because we're bullish, because we're trending up, the dots are green. So what I want to do on SDS is, now keep in mind I'm already in it, so I don't know that I'm going to add more today. I certainly may buy something else in the inverse ETF area, but probably not add to the SDS. So you can see that this is moving up, right? So if we start to see inside this little box here, this might be a buy signal for some folks. Now, what I would look for is some rest in here, and then I want to see those buyers step up like this right here. And that would probably get me in the chart. Also, another place that might get me in the chart is if we start to break out. That might get me in the chart. Now, this is a rounded bottom breakout. You can see it's noted up here on my TC2000. I can see by that little box right there, it's a rounded bottom breakout. So I'm going to go to my rounded bottom breakout chart. Yeah, let's use this one right here. And the rounded bottom breakout, most of you have heard of this. I'll talk about it in another video. This is my favorite strategy of all, strategy where price is over the 50-day moving average and heading for the 200 period moving average up here. So here we've been in a nice long downtrend. We've got a low, high, higher low, higher high, higher low, and now we're working for that higher high. Price again above the T line. We're also above the 50-day period moving average, and that makes it the rounded bottom breakout. Another chart that I'm kind of like is the SQQQ. Let me get rid of all that. There we go. See how SQQ closed up over the 50 period moving average. That made it a rounded bottom breakout. And yesterday, although the body of the candle is down from the open, we stayed above that 50 period moving average. So I'm looking at this as a bullish trade. Looking at this as a bullish trade. You can see where price is above the T line is above the trinicator, and the trinicator is green. So now what we're looking for is our basic entry chart patterns. Our basic entry chart patterns could be where a chart has moved up, whether it be one candle or multiple candles, and has pulled, and I probably should be using a different color here. There we go. Where we've moved up, and then we've pulled back. Again, this could be one candle, two candles. It could be even 10 candles. And then we want a little bit of a pullback or rest. We call this a PBO, a pullback. The O stands for opportunity. Now what we're going to do is we're going to wait for the buyers to start stepping in, and that's the opportunity. So if we start seeing buyers in here, that might be the opportunity. Another chart pattern that I tend to like is this right here, where we just consolidate pretty tight right in there. And if we were just to draw a line down at the bottom here and then draw one at the top, you can see how we've started to box in price staying within that top and within that bottom. So in this range. So if we start to see a breakout of this range, that would also be an indication to buy. So keeping an eye on this SQQQ. Another one is TZA. So if you're looking to go short IWM, and some people can't go short for whatever reason, and some people can't afford $144. Even on an option, you might not be able to afford the cost. So one way to think of it is one way I do it is I look at the inverse ETFs. In this case, it would be TZA that I would be looking at. Now, IWM, we're sitting here right at the 200 moving average, dotted deuce here, 200 here. So there's a possibility it bounces. There is a possibility. We have an indecision day yesterday. So let's look at TZA. So knowing that, I'm not going to jump into this chart right away. I want to see follow through. And I don't have to buy it low. You know, if your target could be up here, you don't have to buy it low. You'll make plenty money if you waited till it broke out and then, you know, traded that. There's plenty of money to be made there. So I'm not going to buy it till it definitely breaks out. There's also, what I also might see is if, based on the IWM chart, price may rise a little bit today. Well, what that might do is pull the TZA back down just slightly. Well, if it does that, that actually sets it up for a better trade, in my opinion. So let the market bounce a little bit. That will drop TZA just a little bit. And then let's look for that opportunity in that pullback. And that would be our PBO here, pullback opportunity. So possibly on a breakout, my preference would be on some consolidation. And by the way, the consolidation doesn't have to be all that down. It could be just sideways. And then we get that opportunity to step in here. So we'll keep an eye on that. I have a whole list of the inverse ETFs. Not that many, actually. I don't go after every single ETF that's out there. Don't need to, really. I've got 17 on this list. I'll see if I can't post them out there in the YouTube chat for anybody that wants them. I'll see if I can get those posted out there for you today. All right, I'm going to drop off here. This video has been 27 minutes long, and I want to say thank you for watching our video. Hey, if you like the video, please share it with your trading buddies. Send the link to them, see what they think about it. Give us a thumbs up if you like it. And don't forget to subscribe. That way you just won't miss any videos that we put out. Thanks again, everybody. Have a great Friday and a terrific weekend. And we'll see you in the trading room. Thank you.